This video is a slightly unscheduled one, but a video in response to what some of you guys have asked to see. It's a follow-up to a previous video. In the last video, which I'll link if you haven't already seen that, we tested a 3-bar momentum strategy and we looked at the daily time frame. The results for that strategy on the daily time frame were generally fairly poor, although we did see some promise using Australian dollar, US dollar. But after looking at the results, we saw that we had only very few trades per year, and I deemed that it was probably not that attractive one to trade live. So I suggested that to get some more trades, we could use that same 3-bar pattern, but use it on a smaller time frame. And that's exactly what we're going to look at in this video. We're going to use the same 3-bar momentum pattern, but we're going to test it this time on the 60-minute chart, 240-minute chart, and the 720-minute chart. And we'll be looking at the same 14 Forex pairs. I want to get straight into the results from all the tests I've done, so I won't spend much time in this video explaining how the strategy works. If you want to know more about that, then have a look at the previous video. Essentially, what we're looking for is a 3-bar pattern, which looks something a little bit like this for a long trade, and then it looks the opposite for a short trade. The strategy isn't my idea, it's a strategy which I picked up from Oxford Capital Strategies website, and you can read all about the testing which they've carried out on the futures markets, and you can read about the rules on the page here. Once we've identified that 3-bar pattern, there's one last trade filter which we might want to consider, and we're going to test this. We want to look at the 3rd bar, or the last bar of that 3-bar pattern, and make sure that the high is higher than the last X bars, so let's say 10 bars based on the previous bar. So it's breaking above the highest high of the last 10 bars. That's for a long trade, and it's the opposite for short. Make sure that it's the lowest low over the last 10 bars. We're going to call that the look back filter length. We're going to test that number. So what that means, if we're going long, then we have to be in a trend already. We really have to be pushing upwards, and we're jumping on the trend, hoping that the momentum is going to continue, and we're going to be in that sort of trend continuation trade. So that look back filter is a variable which we're going to be changing. We could be changing it from 5 bars, 10 bars, 20 bars. That's the first variable which we're going to be testing. And the second variable which we're going to be testing in this video is the X bar exit. We're just going to exit after a certain amount of bars. Could be 3 bars, 6 bars, 10 bars. We're going to test that. I carried out tests on both the look back for the filter and that X bar exit, and I tested those on each of the 3 time frames: 60-minute, 240 and 720. I started testing at a portfolio level, meaning that I grouped the 14 Forex pairs together as one in a portfolio, and I tested the 3 time frames, so a portfolio for each of the 3 time frames. Of course, I could have tested all the markets individually, but that would have increased the amount of tests I'd done from about 160 tests to well over 2,000 tests. And quite honestly, that's kind of straying away from the general idea of these videos. By the way, for those of you guys who don't already know, I'm doing these testing videos as a part of a series, and I'm conducting the tests on different strategies and timeframes, all on the Forex markets. And then I'm recording the results and I'm putting them in a database where you can see the results and get the link to the corresponding video like I'm doing here today. You guys are here coming along for the journey, and you're going to get free access to that database. It's a spreadsheet which I'll share with you in Google Sheets. If you haven't already seen that, I'll leave the link down below where you can get instant free access to that. Now, going back to testing this 3-bar momentum strategy, let me show you a couple of tables which help me describe the testing which I've done for this strategy. The first set of tests we're going to do is testing the exit. So we're exiting after X amount of bars, and we're going to do that from 0 through to 50 bars in steps of 5. And we're going to do that using a look back length of 2, 5, 10 and 20. Now remember, 2 is using no look back filter whatsoever, so we're just taking all the trades. And that's going to give us 44 tests for each time frame. So we're going to do all of these tests using the 60-minute time frame, then the 240-minute, then the 720-minute. So we're going to end up with 132 test results. Then we'll move on to the next test. In the next test, I looked at each of the 3 time frames, 60, 240, 720, and looked to see if I could find the best or the most stable X bar exit. For 60, the 30 bar exit looked best. For 240, the 10 looked best, and the 720, the 10 looked best. So then for each time frame, using the relevant X bar exit, I'm going to test the look back filter from 2, which is no filter, and then go in steps of 5 all the way to a length of 42 bars. And that's going to be 9 tests for each time frame and totaling of 27 tests. All the tests were done using Oanda Forex data from January 2008 through to April 2023. And I'm not going to show you the complete 159 separate tests which I've done, because quite honestly it would be a waste of your time. I can sum it up quickly to say that the results we saw were fairly disappointing, not too dissimilar to the disappointing results we saw when we tested on the daily time frame in the previous video. Sure, we had more trades, and that was the idea. By using smaller time frames, we wanted more trades, and we got more trades on the smaller time frame. But we just didn't see any consistent edges. The only results which did actually catch my eye were for Australian dollar, US dollar again, and this time for the 720 minute or the 12-hour chart. Remember, in the last video we saw that the results on the Australian dollar, US dollar for the daily chart were okay too. So again, I decided to test this further on the 720 minute chart. Now, bear in mind that when I was running the optimizations to see which results were best, I was only looking at the best results on a portfolio level. And then I was going into the portfolio and looking at the individual markets. As the Australian dollar, US dollar, 12-hour or 720 minute caught my eye, now we're going to do some more tests on just a single market level rather than the portfolio level. And that's what we're going to look at next. I chose 3 time frames. I actually dropped the 60-minute time frame because we were in a trade for such a short period of time. The average trade value was so small. So I picked 3 slightly longer time frames: 240 minute, 480 minute or 8-hour, and 720 minute or 12-hour charts. And using each of those 3 time frames, I ran some more optimizations looking at the length of the look back filter and the X bar exit. So they're the results which we're going to look at next. Just before we do that though, currently I'm giving viewers free access to my 22-page Beat the Market strategy guidebook. In there you'll find 3 more rule-based trading strategies with pretty decent backtests. I'll leave the links for that if that interests you down below. If you've already got that, or you want to take your trading to the next level, then you should probably consider enrolling in my popular trading course. I'll also leave the links down below where you can find more information about that. Okay, let's go and have a look at those test results. Here we're just looking at Australian dollar, US dollar, and I've got the 3 different time frames. I've got a 720 minute here, 480 here, and the smallest 240 minute here. So let's look at some of the optimizations for them. We're going to run both the look back filter and the X bar exit, run the optimizations together. We're going to run the filter look back length from 2, which is no filter, through to 42 in steps of 5, and then my bar exit from 0, which is stop and reverse, to 50 in steps of 5. So 9 optimizations here and 11 here, totaling 99 optimizations. So let's run that and see what happens. Now if we look at the net profit, now all of these results are in pips rather than a dollar value. Now we've got 1 through to 99. Let's scroll down to the bottom. If we go down to the bottom, I have these listed in net profit order. We can see that the worst, number 99, is still profitable. So that's really good news that 100% of these tests are profitable on the 720 minute chart. Let's just quickly select one of the better ones. So we're using a bar exit here, 10, 20, 30, 20, 25. Filter look back, looks like 7 is quite a good filter look back. So let's just pick 7 and 20, 20 somewhere in the middle. We'll select those and have a quick look at the results. That's what the equity curve looks like using those results. So there is some sort of consistent behaviour. I've run an optimization across the whole data set. This is not how I normally develop strategies, so I'm not suggesting that you go away and trade this strategy. This is just an example, just to see if some of these combinations did work. For those of you who haven't seen some of our regular videos. This is not how I optimize or develop a strategy. But we can see that 99 out of 99 of those combinations worked on the 720-minute chart. So let's run the same optimization on the 480-minute chart. If I list them in net profit, we can see that, if I scroll down, only the first 27 results, so only 27 out of the 99 combinations were profitable. Looking at some of the better results, we're looking at a bar exit of 0, that's stop and reverse. We've got 50 there, 40 there. So these variables are sort of all over the place. And I don't like the fact that only 27 out of the 99 combinations were profitable. Let's have a look at the last time frame, which is the 240-minute. Again, let's sort these in profitable order. And this time we can see that only the first 16 were profitable. So only 16 out of 99 profitable. So that's even worse. So it looks like the smaller the time frame with Australian dollar, US dollar, the worse the results get. It seems like it works better on the 720-minute or 12-hour chart and what we saw in the previous video, which was on the daily chart. This strategy as a whole has been a bit of a disaster on the Forex markets, hasn't it? We've tested 4 different timeframes and pretty much everything works badly. But we wouldn't know that, and we wouldn't have come to that conclusion had we not done the testing. And that's what algorithmic trading is all about. It's about doing lots of testing and, more often than not, bad results. You guys are lucky because I generally only share the better results with you. I don't show you all the failed tests which I go through to find some of the better stuff. I do that purposely to try and make these videos as helpful and as useful as possible. Next time I do hope to bring you a strategy which does have potential to trade live. Thanks for watching up until now. I expect if you're still here, then you've got a real interest in what it takes to find an algorithmic strategy which does have an edge. You're not just after a quick pound or a dollar. You want to learn the process. I hope you found the video interesting, and if you have, then please give it a thumbs up. I expect I'll see you on the next strategy testing video, but until then, this is Jared Goodwin, and thank you.